like we'll be like, let's go out to dinner and try something new, you know?
Yeah.
And I'm like so tired, I get home.
Yeah.
I'm like, let's just get a pizza and veg out.
Vivid visions of us carry on.
It's August. August is like a weird month in the fact that it's kind of like a roller coaster. You get showings like left and right, or sometimes you don't get showings at all. Property can go 10 days without getting showings. But we are heading into what I call investment season. And this is a time when people are always thinking like, hey, what can I do to make a good investment? What's a good rental property look like? So what we're gonna do is we're gonna go around and look at a couple of the properties we have that would be good rental opportunities. And since we're heading into investment season, I thought now would be a good time to talk about like what's a good investment in Chicago. So let's go.
I see it all even when looking down.
Hey, it's Matt Laricy here. Calling you. We just got an offer in. Give me a shout when you get a chance.
You were around. No longer here.
So when we're talking about heading into investment season, this is a great entry-level investment buy at $150,000. It's close to the hospitals and some of the universities. So if you're trying to get your feet wet and see if you want to be a landlord, where we're heading right now would be a perfect opportunity to kind of see if you got the stomach or appetite to be a landlord.
Hold on, hear me out. Empty rooms.
The downside about buildings like this is that the elevators can take forever. Jesus, 26 floors here. 26 floors, 161 units. Holy shit, is this taking forever?
Me now. I just wanna let you know I'm proud. I just wanna let you know I'm proud.
For 150,000, we're not going to get, you know, like a premier tier A type building, but I mean, still pretty good shape. You have a 24-hour doorman here, a pool, a small fitness center, and this would be a perfect entry-level investment. Right now, today, in its current shape, it'd probably rent around $1,500 or so. So you have to look at the numbers on something like this. So this is a true one bedroom. For a $150,000 investment at $2,870 a year for taxes and $674 a month for HOAs, with common insurance with 25% down, you're looking at about $1,550 a month is gonna be your all-in cost. You could rent this place out in its current shape today for about $1,650. Fixed up, you put maybe $20,000 into this place, you could easily get $1,850 for this place all day. So there's gonna be a good investment because you're already cash flow positive right out of the bat in its current shape. And if you put money into it, you're gonna make even more money a month off it.
This could be so loud. I just wanna let you know.
All right, so that's a one bedroom, more of your entry level. Now we're gonna check out kind of like a middle of the road, 2-bedroom investment. We're gonna head to the West Loop to look at a great opportunity that's got a profitable rental going on.
I just wanna let you know I'm proud. I just wanna let you know I'm proud.
All right, so we're in the West Loop, and this would be a great investment opportunity for the middle of the road investor. It's a 2-bed, 2-bath for $350 plus $25,000 for parking. That puts you at $375 all in. If you could cut a deal and get this at $350, it's gonna be a killer rental because your all-in costs with taxes and assessments are gonna run you just under $2,500. In its current shape today, you could get $2,700 for the rental with parking. If you put a couple of bucks into this place, easily $3,000 a month. Let's check it out and you can see what a great cash flow property could look like because getting about $500 a month for profit on a rental is like unheard of. Check this out, unit 612. So this place, $350,000, your taxes are $7,507, your HOAs are $383 a month, your homeowner's insurance for the year is gonna be about $700 a year. With 25% down, this place would be $2,436 a month. Today, in its shape today, $2,700. Paint the cabinets white, put in a subway tile backsplash, change out the carpets, maybe do some small updates in the bathrooms, $3,000 plus a month. That means if you could get up to $3,000 after putting a couple bucks into this place at $2,436, that puts you over $560 plus a month profit off just renting out a property. I mean, it's unheard of to see profits like that. You know, everybody thinks when you rent a condo out that you're gonna be making, you know, like $1,000, $2,000 a month, and it's not like that. I mean, before the market, after the bubble burst, really the main thing is that if you could make If you could break even on your investment, that would have been considered a good investment in like a big city like a condo or something like that. So like again, if you have an investor hat on and you want to be more like that, kind of like that low income investor, sure, you'll see like a 9 to 11% return, but there's a higher risk because you're in a higher risk area. In a downtown big urban city like this, if you can break even or put $100 a month in your pocket, that's good. Another wildly popular investment in Chicago are 3-unit buildings. People love to own the dirt, and owning a 3-unit has become really, really popular in Chicago lately. A good example is behind us, 2335 Moffett. It's going for $850,000 with $12,000 a year taxes. That puts you at $4563-ish a month for your expense. You could get $2,000 for the second and third floor unit, so that's $4,000 plus the duplex down, which puts you at $2,200. So you're at $6,200 income. You can rent out the garage for $200 extra, so now we're at a total of $6,400, and that's gonna give you a great cash flow. So a lot of people like the 3-unit buildings because you get a better cash flow. The downside is they do require a little bit more maintenance. So as we head into investment season, you have to think about what type of investor you are. Are you an entry-level 1-bedroom, a middle-of-the-line 2-bedroom, or are you gonna go all in and get yourself a 3 to 4-unit building? There's no right or wrong answer. It matters what type of investor you are. Subscribe to our vlog now. Bye.